Hello traders, Gary Wagner for Trending Markets. About 10:45 in Honolulu, 4:45 in New York. On Tuesday, 20th day of October, we had the U.S. equities markets close softly, in essence unchanged to down a little bit. If we look at the Dow Jones Industrial Average, off 0.08%, 13 points, an unchanged day in essence. When we take a look at the market itself, my real question is, have we found some real resistance in the market at our current trading price? Now, there's a couple of charts that really kind of point that out. First of all, very, very short-term study, 240 minutes. So we're looking at short-term study also in Japanese average format. When we do that and we look at these lows that came in at the end of September, beginning of October, right in here at about 16,000. Absolutely no doubt. Real support, Dow 16,000. Market comes up, and the first real area that it's got to take out or test are these former top areas right in here, 16,750. When we do that, that's where this real body falls and not necessarily the high, but it didn't seem to have any trouble kind of barreling through. But as it barreled through, take a look at this. The one thing that a Japanese average chart will do for you that a candlestick chart cannot is show you the strength of the trend, whether it's diminishing or whether it's increasing. And so when we look at this chart through those eyes, what we see is, yes, the market was able really to take this out, this being October, the beginning of October here, and this nice rally that ensued. But look at how the body sizes, once we break above these tops, look at these real body sizes here. They're diminishing in terms of the actual size themselves. Body size continually gets smaller until you get this rounded top here with these dojis. So you get an exchange where the bulls were in control. Here, the bears start to go into control. But at the same time, even as it trades lower, it finds really good support in this area of 16,800, but now comes buckle up against this 17,220, call it. And to really see where the 17,220 comes in, we've got to move from a short-term chart to a longer-term chart. So, for example, we'll look at the dailies. Let's go ahead and blow that up. When we do that, here's what we find. These tops that come in right in here roughly correspond to a former level of support here, which is the level of support that this market had as it was trading off near these highs in the market mid-year and just prior to the real correction in which we saw this market move over 10%, I believe 20% from these highs to these lows. But so this to me is a really significant area right in here. And so the fact that we've got this market kind of stumbling right in this area, this is the area we absolutely need to see the market break through. But I really believe that you can see why we've got, on a technical basis, this level of resistance that's just come into the market. So although we've been trying to eke out these higher highs here over the last couple of days, I really believe we have come butt up against this particular level, and this is that level that the market was trading just preceding the dramatic fall that we saw occur at the end of August, going into it culminated really at the end of August, and September is when we came back and found this first level of support at 16,000. So it's for that reason that I have a cautionary sign. I am bullish on this market long term. My sense is that if we can effectively get some closes above this area right here, we're off to the races, and we're going to start to challenge certain other highs that came into the market prior to the fall from grace. So traders, we're looking at the equity through the Dow Jones Industrial Average. I've gone ahead and pulled up our Standard & Poor's S&P 500 now. The S&P 500, the E-mini, was down about 0.33%, down 7 points at 2020. What to me is really the one sign that we have to look at. And first of all, when we consider that resistance area, it's the same areas we're looking at right in here, and it's really based on these bottoms that come in. On the Dow Jones, it was more these areas right in here, the corresponding would be about 2050, and it also correlates to this 200-day moving average. So we have a 200-day moving average, then we've got our shorter term moving average right here. We talked about the fact that we had really, really good support that came in. As this market broke above it, came back down, it just held this level solidly. And now it seems as though we're running into some resistance here. If we get through this area, my target is going to be about 2050 to 2054. It is based upon this 200-day moving average. So I think that our next play is going to be in the S&P 500, but traders, the reluctance is simply to see if it can make it through this particular level. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday. Bye-bye.